You're tuned in to Agriculture Today, and we start our Friday show with a grain market update from K-State grain economist Dan O'Brien. Dan, thanks for joining us once again.
Thank you, Shelby.
Dan, futures have gotten higher, and where are those prices currently at, and what's some historical context with it?
Yeah, we have seen I would consider it to be an unexpected increase in grain futures from where we were November, December, early January. Again, we were bemoaning the fact that it looked like we'd never see any prices moving to the higher side, but we have. So, yeah, so we saw March corn yesterday on February the 6th close at 4.95 and a quarter. It's a far cry from 3.95, and in some of the lower areas where we'd seen prices at. New crop corn 4.69 and three quarters, and we do have some storage. I guess I'd call it storage carry in the market from the March 25 to the May 25 contract. You've got an average of about a little over 6 cents a bushel a month in the futures, which for a grain elevator storage charge in a commercial sense, yeah, that would cover probably a 6 cents charge. You're probably still not covering any borrowed money, any interest cost on that, which you might want to consider. And for soybeans, saw the March contract close at 10.60 and a half yesterday. May at 10.75, got to November 10.66. So the common theme is that they're all above 10, and again up about 3.5, 3.25 cents yesterday. Not a lot, but you have carries that are pretty strong still. March contract to May about 7 and 5/8 cents per bushel per month. So that's covering storage and interest. And out to July, then you also have about 7 and an eighth cents carry. So we're covering on-farm storage pretty handily in most of those cases, even some commercial storage. Of course, that's the market's giving signals that there's still some uncertainty to be dealt with. I I would think that if we do see some of the pardon me, the Brazilian record crop size numbers come into play, that some of that carry would, it may not be there in the actual closing cash market if we hold all the way out there. So, if someone's storing, it's something to look at. While there's still uncertainty and risk in the market, the market's still accounting for those questions to perhaps do some forward sales to try to capture that carry that's keep carrying the futures and see where we go. And for wheat, we have wheat. The March contract closed over $6, 607 and a half. Up actually yesterday up 15 cents, but it's been volatile like that, up and down. And we'll get into the reasons in just a minute. May contract 616 and a quarter. So you've got about 4 and 3/8 cents carry from March to May contract. Another well, the same amount then from May to July. So we do see new crop July closing at 625. So, you got some issues there to consider. I would say when I look at where we're at right now in the futures prices, that whether a person is optimistic or pessimistic about these depends so much on their reference price, their historical perspective. The 495 that we saw today in the corn market, the lead corn contract, really is in your I guess from a chart point of view, you're coming up to the I guess the top of the middle third. In a way, we're at the you're getting to the place where when we have had large rallies in the market, basically like happened in 2000, 2008, 2000, and then again with a short supply and a drought in 2012, all that happened with a short Brazilian crop and Ukraine, Russia in 2022. We got up to these levels where we're at right now, and then had some impetus to shoot us a lot higher. So we're up to almost, in a way, you could call it the point where you either have some impetus, some major move that takes the market a lot higher, or you've reached kind of the top of the middle ground. So it's kind of a precipice, and a lot of I'm sure we would love to get to see the $7 and $8 corn figures that would come in that would really reward people on the in the cash markets. But we'd have to have some crises someplace else, hopefully somewhere else in the world, to product on the production side, or as we've seen in the Ukraine-Russia situation on the geopolitical demand side, to take us a lot higher. So that's something to keep track of, to give thought to. I would say then for the wheat market, this 607 and a half, again, for those that we're looking for 7.5 and $8 wheat, etc. We certainly have seen those, but again, for the $6 wheat situation, you're again just at the place where major moves start to happen. You're kind of at the top of a generally okay market, So pretty similar situation there. I would say that the big rally that happened in 2022 and 23, we basically were at this again, 6 to 6.25 or something in the wheat futures. And from there, then strong market signals came in. Again, as we talked about, Ukraine, Russia, and other issues that really drove us a lot higher. But we got to this point, the point just about here, just over $6 without any of that happening. So that's the question. What do we have something coming that might bring that about? And then for soybean futures, to gain some perspective there, the 1060 is again very similar. We kind of got to this point and then started jumping about on a per month basis, about $1 or $2 back in the 2020 late 20 well 2021-22 time frame. So we got to this point, and then yes, war, drought, whatever came in to bring us a lot higher prices. So I guess they're just a perspective to wrestle with it. Are If you ask anybody, do they have an economic incentive to wait for better prices? Well, of course they do. It helps their profitability bottom line. But historically, we've had to have major news, major problems to take us a lot higher than where we're at right now. So just thought provoking. And I guess economists would say, well, what's your reference price? What do you count the current prices as really good opportunities? Uh, is and what would we need to take them a lot higher? Well, we need something that's a supply shortfall or a demand surge. And so that's at least my perspective at this point.
Are we seeing any of those higher prices when we look at cash?
That's the challenge. Not really. So we've seen some pretty good cash prices right now. That corn has improved. That again, the bellwether market that we try to follow for cash corn in Garden City as a 20 cent over basis. It had been about 10, 15 for the top bids in the area. Got up to about $5.15 for corn. Historically, that's pretty good. When we're over five. Other best prices around the countryside, in southeast area around the Pittsburgh region. There's a 485 high, 478 Hutchinson, 470 Topeka, 467 Salina, 475 in Colby. So, there's some pretty good bids. The best forward bids for harvest are out in the west. Again, Garden City at five over at the Dees contract at 475, even money at 470. The next being about 455 down the Pittsburgh area. So yeah, we're doing quote okay. But at these levels, we generally think, yeah, we're fully covering our cash costs. We're covering most of our full economic costs. Again, like on top of the seed, the fertilizer, and the herbicides, we're covering some machinery and some land costs. But again, the larger profits are above $5 and 5 into 6. So it's kind of we're dancing around the full economic cost level, or coming towards it. I would say for sorghum, those prices are lower. We're coming into the season where if someone has train loads in central Kansas to fill, that's kind of when you see a price spike. And the top bid in the country right now in Kansas, in the Topeka area, about 445 cash, 435 in both Salina and Hutchinson in those same areas, 435 out in Colby. So 435 is better than something below four, which is kind of where we were at prior to that. For soybeans, we do have now some forward bids above $10, which again for fall harvest. And that would be in the Salina area, 1001 top bid, 1006 in Hutchinson, 1011 in Pittsburgh. And again, we've talked quite a bit about how the new processing plant in southeast Kansas affects some of those forward bids, pardon me. And I'd say for wheat, we are getting closer to $6 as a forward bid. Best bids, at least that I saw from yesterday's markets. Top bid was 587 in Hutchinson area, 585 both in Salina, Topeka areas, 570 in Garden City and Pittsburgh, and then out in Colby, northwest, about 540. So interesting to see how that goes. And when you look at the forward bids for soybeans versus corn, and try to see what signals we're giving to Kansas farmers in terms of relative corn versus soybean acres. Again, out in the west, where we have the lot more feedlot pressure, not pressure to the good side, demand. I mean, uh, again, you got ratios for new crop bids of about 2 point, just a little over two in the Garden City, Colby area. Of course, that's favoring corn because we have a lot of corn demand around there. But you're really at right on the line of neutrality, or even leaning a little bit soybeans when you talk about Salina, even 230, which is what we're counting as neutral. 234, 2.34, 234% soybeans to corn, Topeka, and 231 at Salina. Interestingly, in the Pittsburgh area, still could be even. It's 2.2, kind of actually leaning a little bit corn. It's kind of surprising given what we talked about soybean market down there. So lots of things going on, Shelby, and um, some export movement. Pretty good week for corn export movements. Finally, something happening for grain sorghum. A down week. It's been bouncing up and down for the wheat market, and for soybeans, still some decent movement. But seemingly more anticipation now of what's coming in from those South American harvests that will compete pretty strong in the not too distant future against what's happening in the U.S.
Dan, I appreciate you taking the time to join us once again.
Thank you so much, Shelby. Take care.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now on agriculture today, but we'll be right back.